right, we're back again with another little study session. I'm still studying Scout Sniper, and if you're here with me, just want to say happy that you're here for me. Leave a comment if you watch this video, leave a like, thumbs up, whatever. Let's get to it. All right, so right here we're looking at a daily chart on Euro USD, right? And we're gonna go over like some basics of like higher time frame, equilibrium, premium, and discount. All right, so if you look at this highest high to this lowest low right here, right, just from here to here, and we're going to be studying this little wick right here. First, we're going to be studying price action at this level right here and why a reversal should form right here, right around this area right here on the lower time frame to take a trade down. This was on Thursday, this was on Friday, so we're looking at a short on Friday. This is the day chart, right? So when we start off, I want to look at where is this price trading at, right? Where is this price trading at in terms of this daily range right here? All of this range right here. So I'm going to start from here. So the first thing I looked at was this, right? This high to this low, right? This is impulsive price range from this high to this low, right? This big movement down. Then price now is trading within the high and the low of this range. So if I was to draw 25% fib across this like this, you would see that this line right here is 50% of this high to this low, right? And up here is 75%. So down here would be like 70. So we're like in premium. We're in premium, meaning that anything below 50 is discount, anything above 50 is premium. And if you watch the ICT fair valuation tutorial and the equilibrium versus premium, equilibrium versus discount, you'll know that we're in a premium right here. And that in premium, we look for sells. The algorithm looks for sells in premium because the price buys in discount, distributes in premium. So once it reaches up here, it starts distributing the orders that it accumulated from down in discount. It distributes them every time it passes buy stops right here. The order that it accumulates down here, it distributes or sells them to buyers that's at these buy stops. That's what you call pairing of orders, right? So looking at this and that, first sign we're in discount, so we could have a bearish sentiment, right? Another reason why we can have a bearish sentiment is higher time frame key levels up here. So if you look closely, you'll see a fair value gap right here, which is a SIBI, right? And if you draw from this line to this line and bring it out, you'll see that no bodies are closing above 50% of this SIBI, this bearish fair value gap. Not only that, when price passes this bearish order block right here, you could see that it keeps price under it once it displaces through it. Then as we keep on coming down, right? As we keep on coming down, you can see a fair value gap form right here. There's a fair value gap that forms right in here, right? When you study that fair value gap, do you see any bodies closing within it? No, there's no bodies closing within it. And not only that, but look at this. This down candle sent this up into this high, and once we displace through it, there's a market structure shift right here. If you take the range of this and you bring it over here, right? Do you see any bodies closing in 50% of the body of this? No, it's going down, keep breaking down. And look at it from this level right here. Up candle, right? This up candle came back down, act as a breaker to send price back up. When price passes through it and it comes back up within this range, price is being sent down. Same thing here. Up candle, came through, back down into it, up. You study this midpoint right here to see what's going on. So there's a market maker sell model going on this higher time frame. There's a market maker sell model going on, because here you have a reversal happening up here, right? And then if you look at PD arrays from the left and you draw them over to the right, you'll see that they're switching their functions. Like this down candle that sent price up, price passes through it, comes back into it, it's sending price down. Inversion. Inversion, fair value gap from here to here, you put the midpoint out, inversion is sending price down. All right, so we can go back to the beginnings now of Scout Sniper, and let's look at swings that formed on the left side of this, of price breaking down here. Market maker sell model, right? This is a swing, so you could take that swing and extend it across. This up candle that sent this up to here is a bit, this up candle, when price came up here and came down, this is a bearish order block and it's acting how it's supposed to act right here, right? But if you look at this key level right here, this is this that acted as support to send price up on this left side, now is acting as resistance to keep price down. But when we're on this side now, we could look at this right here too, and we can see that it's lining up with the midpoint. That this is acting like, this is acting how it's supposed to act. It's keeping price down. Good, that's good too. Another thing we could look at is the range. This is a high, this is a swing high right here on the daily. Down here, this is a swing low. This is a swing low. So this is an impulsive range again, right here. So if you look at this range, because it's all ranges, if you look at that range, you'll see that there's a high here, there's a swing low here. And if you look at where this price retraced back into, it retraced back into premium. What do we say at premium? We look for shorts at premium. And from the teachings that we learned so far in Scout Sniper, if you watch chapter 1 and chapter 2 of Scout Sniper on ICT's page, he says that look for trades to form around key levels. And what does he say is a key level? Key levels are daily and 4-hour higher time frame key levels. This is a key level because it's a swing at a daily. Look at this again. I'm gonna show you some more. Right? I know this got a little bit of noise on here. I'm gonna take these off today. So like ICT says, a key level is higher time frame daily and 4-hour level, monthly levels. And he showed us how to find a key level. Look at a swing on a day. Look at the 3 candle pattern that formed a swing. So you have 1, 2, 3. This is a swing. So this level right here, we could highlight all of these lines, or you could keep it clean. I kept it clean with one line because why? This key level on the left side aligned with this bearish order block right in the middle. So that's why I chose that line. But I could choose this line also. So I could go like this. That's a key level right there. Right there, that's a key level. I could have had that early on as price, and I'm going to show you style. Put this right here like this, right? As price came down here and formed a swing, right? Because if you watch the equilibrium versus discount video, right, you notice that after a 3 candle swing is placed, right? That's when you start looking for price to pass equilibrium to take a trade to come back down, or to take a trade to go up into a premium PD array like this bearish order block. See, to target that bearish order block. So if I'm waiting, but because the higher time frame is bearish, right? Why is the higher time frame bearish? Well, I just showed you that. Let's go all the way back here again. Impulsive swing down, swing high to swing low. Price trades back up above 50% of that. This is premium. Price distributes in premium, meaning we can sell in premium. Okay, we're looking at that. Now look at this range from this low to this high. Now market structure shift. If I take a fib from here to here, there will be a 50% line somewhere here. Up here is premium. So we can sell, and then you see a market structure shift right here. Then price comes back up, creates a fair value gap right here, and look, no bodies are closing within the fair value gap, so we're still bearish because it's not expanding beyond that. Then it came down again, formed another swing. Now you are in this range, this to this. So now when price comes back to this level, and if you look at the market maker sell model, you're going to have to study all of those and understand institutional order flow, that whatever sent price up on the left side, once price displaces through it on the right side, we look for it to switch its function. So this level that sent price up, once price displaces through it down here, whenever price comes back to it on this end right here, we're going to be looking for this to act as resistance now. That's inverting functions. That's how support turns to resistance. Okay, so now we're back right into this on the daily. High, swing low, and if we look at this, we could see that we're up in premium right here at an inversion level right here from a higher time frame daily key level right here and right here. This is a 3 candle swing pattern. 1, 2, 3, middle candle, highest. So you could take the high from here and look at that level right here. But I didn't want to be this is all hindsight studying, so I'm not gonna act like I did that, but I'm just showing you that as I'm going through it and studying what I have already learned, I'm just looking at all the concepts coming together, right? So let's say we didn't choose that, right? But we chose this because this is a swing and we're looking at it from here, and we're looking at the midpoint of this bearish order block up candle that sent these 2 candles down, and we see the midpoint area and we're judging strength, and we could see that no bodies are forming up here on the daily. Okay, boom. So this is a daily key level that price could bounce from. So this is a point of interest, POI, that we're going to be looking for manipulation up into to then take price down. Okay, because when you're bearish, you look for manipulation up to send price down. Let's drop to a 4 hour and look at those levels. Boom. All right, so now we're dropping to a 4 hour, and I'm going to take some of these noise off too because we don't need it on this part. Okay, so now same thing, but just breaking the price down a little bit more, getting more detail. Now you're in the 4 hour, same thing is going on. Look, there's a market structure, breaker structure right here. Then you have the high to the low, and this is up in premium of this high to this low. Okay, good. Then you have this up candle right here, right? This is an up candle that sent these prices down. Take the midpoint of the body of that and draw it across. That's a key level. That's a key level that we can anticipate price manipulating into and looking for trades and studying these key levels when we're ready to take trades, right? So this is a 4 hour now. Now Let's go to the 1 hour, right? Now, this is Friday open, right? So you got open, high, low, right? This made London low right here. What time was this? 3 o'clock. That was London lows. And price went up from London low. It expanded up. But we know that we're bearish on the higher time frame, so we're looking for sells. So if price is expanding up within that range, and if you look at the hourly, this is the same range from here to here, and price is expanding up and it's past the midpoint, now we're in premium of this range. So we can anticipate at kill zone times a reversal somewhere up here for price to manipulate up and then distribute down. So if you look at this chart right here, you see that this right here is 7 a.m. and you can see that on this candle we open, right? Open on 8, open, low, high, and closed below here. So we already at 8, we've manipulated up into this level, very close to this level right here, right? So this key level and this key level. And you know what's interesting? ICT showed something called event horizon when you're looking at targets, right? And you could do other things to test strength, because as this price manipulates up into here, right, we had already drawn our daily key level and our 4-hour key level. These two levels are potential areas that price could reach into, right? Hit and then form a reversal around these areas. But look at this. If you take a fib from here, these two key levels right here, and you draw it out right here, look at that. Look how close we are to where the reversal happened, and we could tighten this up. So I'm using two key levels, the 4-hour and the daily, and as price is going up, sweeping liquidity all across these sides, sweeping liquidity over here. I'm studying how is it reacting from here. Is it bouncing off of those levels that it goes through and going up, meaning inverting those levels? No. As it reaches here, it's showing weakness. And it's a weakness that we anticipated because we're already up in premium right here. So if I drop down to a 30-minute, I like the 30-minute chart because I can see 30-minute cycles of time and liquidity pools. Sorry, Control Z. If we drop to the 30-minute, you'll see something else nice happening around here, right? And I'm gonna start taking some of these off. No, I'm gonna leave that. So you have 12 a.m. right here, right? Open, low, high, went down, and boom, came through, came up in here, right? And we just explained the weakness here, but look at the liquidity that is sweeping, right? Create London low down here, equal lows engineered. All this is sell side liquidity being engineered, right? So from down here in London low, you expand it up, and look how it did with New York. 7 a.m. boom, ran through. 8, boom, liquidity ran through all the way up to around 8:45 or so. It says 8:30 here, right? On this time frame, a 30-minute. 8:30, right? 7 to 8:30 is 7 to 8:30 is 90-minute cycles, meaning that the liquidity that's formed between 7 and 8:30, you see equal lows are formed down here, and you see this is taking out liquidity, going up to buy side, taking out buy side liquidity. Between here and here, And when this happened, I was studying SMT between Euro USD and GBP, but we're not going to talk about that. So as we come up into here now, we can see that we're right between two higher time frame key levels. The 4-hour level, which is this red line right here. If I go back on the 4-hour, let's see, it's right here, and I'm going to double click this and bring it down to the minutes. All right, so you can see it on the minutes. If you go on the 30-minute, there it is, right? And we can see weakness between these two target areas, and we're right around the midpoint of that, right? No bodies are closing, no 30-minute bodies are closing. Now, from this level right up here, we could drop down to the 15-second if we wanted to. We can. Why? Because I'm going to show you. Let's look at the 3-minute though. On the 3-minute, you can see that this right here is 8:45, right? So when you look at this from a 3-minute, this is 8:45, 8:48, right? 8:48. And I'm gonna pull this like this, and I'm gonna put the day right here, just so you can see where I'm at in terms of this and what's going on in terms of a day chart at that level. All right, so this is 8:50. All right, that's 8:50 on the 15-minute chart, right? And if you expand it, I'm going to show you something, right? So now, when 8 o'clock was, this was 8 o'clock, right? So 7 right here to 8:30, the highest high and the lowest low. The highest high between this time frame right here is right here. So we mark that across. And you can see as 8:30 opens, it opens, went low, then went high, and took out the liquidity formed right here. So you took out that liquidity right there, right? And now we come to this area up here. So once you come up here, right, this is what's going to happen. Boom, price comes up, comes down, doesn't pass this fair value gap midpoint when it's coming down. Price expands through, does not pass this low right here. Then it expands and takes out 8:45 right here. That's a sweep of liquidity up into the midpoint between those two right here and right here. This green, the midpoint of this green line right here. We're going to zoom in on here right here on the 15 seconds. This is how you could top tick and come down when you're studying the market maker model, because now we believe that we're at a zenith. Why? Because on a higher time frame, we're in premium. We already know that up here is premium. So now we're looking for a manipulation, right? We're looking for a manipulation. All of this down here was a consolidation. If you look at it, consolidation, manipulation up, and then we're looking for the distribution to come down. But before this big distribution, you're gonna have a smart money reversal. This is the market maker model. You gotta study the market maker model, right? So this area around here, we're looking for a reversal, right? Because we're looking for a reversal at a higher time frame key level, daily or 4-hour. All right. So we're looking at it as we see price expand up, right? Take out 8 o'clock liquidity right here. Boom, expands up. Right here is 8:45. Then we see price come down. Boom, right? But we're not going to just chase this price down. If you look, now we're going to look at institutional order flow. We got to look at institutional order flow. If you look right here, this is a BISI, right? Meaning that if price is still bullish, it should bounce off the midpoint and come back up. So it displaced through it. Okay, good. Let's wait to see how it reacts to midpoint of this. Boom, we see it displaced through again on the upside. So this right here becomes a buy side delivery, creates a BISI, sell side delivery, that's equal buy side and equal sell side right in this area. Then what do you happen next? As if we were waiting to take a trade down, we would be looking for price to reverse back into here and then form a reversal to come down. So as we're waiting for price to come back up in here, if we're looking to take a trade, what do you see happening? We can see a couple of things happening. Price is closing beyond the midpoint of this. Okay, so that means that it still has more to go. And what does it do? Boom, boom, boom. Takes out this liquidity and goes all the way up to here. Where is that? That's almost 50% between these two higher time frame key levels in premium that we were anticipating a reversal of format. What happens next? After here, right up in here, 15 seconds, boom, you see a short term swing low form right here. All right, price expands through it and leaves a gap. That's displacement. So price displaced through it, and then we're back in this range right here, this BISI. We already had buy side, sell side. Now we had another buy side. Then now we kept on, we displaced through the midpoint of this again and closed below it. So when we close below it right here, right, and price continues down and takes out this low that put in this high, that's pivotal. That's a strong market structure shift. What we can do now, right, is this. We can take this, look at the change in state of character right here, and bring this from the change in state of character down to the swing low that formed after this high was put in. Boom. Then we're also looking at the fact that it passed through this bearish 4-hour order block. Remember this green line and this green line and this midpoint? That was a higher time frame key level. That's this 4-hour order block right here. And bearish order block, I'm gonna show it on the 4-hour. Boom. There it is right here. That's that right there. So if price can pass through that, that is showing you strong bearishness. Also, when you add on all the other confluences that we talked about from the higher time frame and price being in premium and all of that, we can look at this as a potential area for a reversal or for entry to target lows. What lows? The London low. When I drop it down to a 1 hour, you see it clearer. This low, London low, Asia low, clean lows. So from that, now look at what's going on here. And then we're going to show you how to balance price range complete. So you have buy side, sell side. That's one equal pair of buy side and sell side delivery. Then you have another. So let's look at this. One buy side, one sell side. That's one pair. Another buy side and another sell side. That's 2 times. That's 2 times equal pairs right here. So if I was to put a line right down the middle of this right here, right, like this, let's put it right here, right? You have buy side, sell side, buy side, sell side. That's balanced. That's balance. If you was looking at one side of a seesaw versus this side of the seesaw, that's balance. That's what I learned from Frank 369 Zusi. That's balance. Now, this delivery that came out of the balanced price range and closed below the market structure shift right here, look for the inefficiency that formed. You have an inefficiency here, you have an inefficiency here. Boom. Look where this 50%. When you pull it from here to here, where's equilibrium of this range from the change in state of character to the low, the swing low being put in right here. You see a swing low? 1, 2, 3. Swing low, swing high, change in state of delivery right here with this small market structure shift right here. Come all the way down to here, drag your fib from this to this, 50%. Look at where these bodies are closing. Nothing is passing 50%. That is your entry to go low. Because why? Price is already balanced. Buy side delivery, sell side delivery. Buy side delivery, sell side delivery. If you look at the midpoint of that, encapsulate this 2 deliveries, a buy side delivery, sell side delivery. See the imbalance? That imbalance range right here is balanced. That's why price is not going beyond 50% of this range. See that range created by that SIBI? Price is not going below 50% of that. And when you look at that time, what time is it? You're at 8:54. Right? A lot of other things happening, but I'm not too versed on it. But 8:50 is macro time too, where the market usually spools in one direction. But I'm not too clear on macros and stuff like that. 8:45, also 8:45 and 8:15. Those are like macro times where we anticipate expansion. If a reversal is not already put in, we expect a manipulation to happen in that time. Or if a reversal is already put in, which you can see a market structure shift happen, we can anticipate expansion during those times. And you can see at 8:50 right here, this market structure shift or reversal was already put in right here, and the expansion happening from 8:50, right? So it retraced back up into 50%. You take this. So from a 15-minute standpoint, we could have did something like this. Short position could have been placed right here, right? Right here at there, right? And your stop could be placed right here on a 15-second chart. And then your target could be all the way down. All the way down to Asia. That could be a target right there. Or for the 15-second. Boom. Right? Price comes up, gets out. And that could be a setup right there. You know what I'm saying? Because you anticipate that price will not pass through here. So you could put it right here. Put it up to this high right here. 845 high right here. All right. If you look at a 15-minute right here. And you see price just taking out all of that liquidity, distributing, taking out all of that built up sell side liquidity as it's coming down London, all of that. All right. And this is the market maker sell model. Original consolidation, buy side of the curve, sell side of the curve. And that's how it goes. And yeah, that's it. And so that's it for today's tutorial. Peace. Stay safe. Peace.